This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on August 21st, 2014. Our time is 8:50 Mountain. Our radio show runs on your favorite radio stations. Also, the shows, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. Go there and stream the radio shows anytime at your convenience. We have a podcast through iTunes. Go to iTunes, type in the World Financial Report on Radio. You'll find us there. We're portable on any device that you have. You can subscribe to the podcast. We go anywhere you do. Don't forget, connect with Harold about investing in hard assets at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. As we start today's show, Harold is going to be on Fox Business News, Risk and Reward with Deirdre Bolton, who used to be with Bloomberg, on August 25th. And that will be on TV at about 11:40 our time Mountain. And we will be happy to send that interview out to you. Of course, here in Canada, we don't get Fox Business News. We get Fox News, but not Fox Business News. And it's not streaming on the internet, but we will get a copy of it and send it out to you. There's a great interview that Harold did with Jerry Bonino, Eye on Aspen. And we have that in our free weekly newsletter. We have the link to it if you'd like to see Harold's hour-long interview, which is outstanding. We'll be happy to send it out to you. Jerry Bonino did a great job interviewing Harold, and we can send that out via our newsletter, and we can send it out to you if you'd like to ask for it by contacting us. In the news this week, Ebola continues to be a major concern. In fact, relief officials are urging groups to step up Ebola efforts. The outbreak in West Africa is a complete disaster, and health agencies do not yet grasp its scope, according to the president of the relief group, Doctors Without Borders, and they said that during the week. Also, average price for beef hits an all-time high this week. We talked about confiscation of money in the past through bail-ins. Well, you're not going to believe what's happened in Russia. You know, the pension money that Russians put away? Now, that if you can believe it, the Russian government is taking it and keeping it for itself. Here in Canada, we have the Canada Pension Plan. Well, if the Canadian government did that, it would be similar to what they're doing in Russia. The Russian government seized its citizens' pension contributions, normally 6% of Russian salaries invested in financial markets earmarked for retirement. That's about $8 billion in contributions. Russia is not the first country to confiscate pension assets to pay its bills. Also, George Soros, one of the world's richest men, making a very bearish call on the S&P 500 stock exchange. And he's actually coming out, the stock index, he's coming out and making a further bear call. He's predicting that through this call he's making on the market that it could fall very, very severely. Also, 25% of troops use food banks in the United States. 35% of Americans are on welfare, 110 million people. 36% of Americans do not have any savings whatsoever for retirement. And one of the top stories of the week on the hard asset front, 1962 Ferrari GTO sold for $34.5 million at auction. One of the websites that we keep an eye on is King World News, and they have interviewed Gerald Celente. And it was interesting this week, Harold. Gerald Celente, in an article, had a letter that was sent to him from a resident of Westchester County, one of the richest counties in the United States. And it said, "Dear Mr. Celente, I was just reading your King World News article. The economy, is worse than what you said. Here in Westchester County, there are for rent and for sale signs on every street. My business will be closing Labor Day, although I will keep my phone on for orders. The postman comes every day telling me how everyone is crying about the lack of business. The pharmacist and the deli are crying about lack of business. The summer is drawing to a close, and the phone hasn't rung in days. My competitors all say the same. The winter will be brutal in the construction industry. That is an email letter that Gerald Celente got from a person who had read an article from King World News where Gerald was being interviewed. And Harold, that's one of the things that we're starting to hear. We know Europe is in really tough shape. We know geopolitically the world's in tough shape, but things are not as they appear in the United States when you list off 35% of Americans on welfare, 36% no savings, 25% of U.S. troops using food banks, and yet we're being told that there's this miraculous recovery. It's just hard to believe.
It really is, and don't leave off that 75% of Americans have less than $10,000 in the bank. But with all that rosy news that you just gave, Randy, all the things that are going on in the United States that are concerning, and there's a lot more than what you just mentioned, the stock market hit record levels. So go figure it. If that isn't the biggest joke, that the stock market is supposed to be reflective of what's happening within that country, the economy. And the economy, if it's so bad, how in the world is the Dow hitting record levels? The fact is that it's manipulated. It's meant to kept that high, primarily so people believe exactly what you just said, Randy, that the economy is getting better and it's in a full recovery and things are getting better. And it really isn't. The middle class is getting killed here. And all you have to do is watch what's happening in Walmart, and that will tell you what's happening with the middle class. They have no money. They're not spending any money. And the fact is that food prices and cost of living is exploding. And that's inflation. And we know that they're mentioning raising interest rates. Raising interest rates is the way that you fight inflation. But we all know that as soon as the Federal Reserve starts to raise interest rates and the market starts to plummet, which it will, they're going to stop doing it, run right back to quantitative easing 4, which there's no doubt in my mind that they're going to do, and they're going to stabilize the market that way. It has nothing to do with the overall economy, and that's a pity because the fact is that people that are trading in that market right now are led into a false sense of security thinking that they can't lose again. But that's the way they thought in 1999, that's the way they thought in 2008, and that's the way they're thinking now. They think it's easy money because interest rates are so low, they're at 1 or 2%. Basically, money is borrowing money, if you have the credit rating, is almost free. And basically, if you have the wherewithal to take that money that you're borrowing at 2 or 3%, whatever the rate is going to be, and you can make more with that, well, that's what they appear to be doing in Wall Street. They're borrowing money really cheap, and they're putting it into their business, and they're making money other ways. But the bottom line is that it doesn't affect the U.S. economy in any way. So what you have is a handful of people doing extremely well, and the majority doing terrible. The unfortunate thing is that the worst is yet to come because they never rebuilt the foundation. It's like building a house. You know, if you build a weak foundation, that house is going to crumble. You need a strong foundation, and unfortunately after 2008 when everything fell apart, when the stock market dropped from $14,000 to $6,500, when gold went all the way up to $1,900, when oil went to $150, all these situations that were going on, again, when the stock markets especially fell, and Lehman went under, and General Motors went under, and Chrysler went under, and AIG Insurance, and all the banks and everything, what they did is they tried to piece things back together. But they never built a strong foundation, and now that foundation is going to crumble. And if you happen to be one of the ones that are sitting in those type of assets, like stocks or bonds or paper-type assets, you're going to feel it because there's no doubt that this market is going to fall again. George Soros is a very, very intelligent man. He's one of the smartest men in the world and one of the biggest traders in the world. And if he's got this type of short position on in the market, it's for a reason. It's either a hedge or an out-and-out speculative trade that he feels that the market is going to crumble. And George Soros has been in these type of situations before because he's the one who brought down the Bank of England. He's done that before. He's made $1 billion in a day back 20, 30 years ago when when that was a lot of money. So the fact is that if he's got a position like that in the market, not only does he feel that way, we've felt that way for a long time. There's no way in the world that the Dow should be sitting at record levels right now with all that's going on. The other thing is that it's the summertime. August is actually the slowest month of the year when most people are off, and basically the markets are lethargic. They're not trading hardly at any volume whatsoever. So as we're taping the show here on Thursday, gold is down $14. It's trading at $12.78. We felt that the market would drift lower during the summer, and that's exactly what is happening. Silver's down in nickel. It's trading at $19.50. Platinum's down $10 at $14.22. But palladium is up $8. It actually is trading at $8.78. But do you know that palladium has actually hit the highest price that it's hit in about 20 some odd years? It actually hit over $900 this week, and a lot of that has to do with Russia, because Russia produces most of the world's palladium and platinum. And if these sanctions continue against Russia, you're going to see certain commodities really start to take off. So the unfortunate thing is right now, just looking at the overall world economy, you've got parts of Europe in a recession. Italy's in a recession. Germany had back-to-back horrible numbers. They're moving into recession. That's the biggest economy in Europe, is Germany. France is about to go into recession, as is most of Europe, as is China. China is doing horrible. Their real estate market and their export market is doing terrible. So now you've got a situation where Europe is in recession and going deeper into it. You've got China going into recession, and that is going to hurt the United States economy terribly. So we are going to see, in my opinion and many others, a substantial drop-off in the stock markets moving forward. It could happen by the end of this year. It could happen in the first quarter of next year, but there's no doubt in my mind that it is going to happen, and a lot of it is going to happen due to the fact that Europe is in a recession, and it's going to get heavier and heavier into it, and that's really going to affect the United States in a big way. So the bottom line is that if you're sitting in conventional investments, stocks, real estate, bonds, those type of assets, you're going to have some rocky roads. There's no doubt about it that the stock markets around the world are going to fall substantially as Europe and China gets heavier into recession. There's no doubt also in my mind that we're going to have inflation. So what a terrible time for this to happen, that we have food prices and inflation going through the roof at a time when the country's going to go into a recession and money's going to be tight. That makes it even more difficult. So as that scenario unwinds, there's very few assets that will make you money. There's very few assets that will let you keep what you have. And in these type of markets, the way things are today, especially for the smaller investor, it's very important to keep your capital. It's very important not to lose your money by putting it into the wrong marketplace. So in order to own the right type of assets that will, keep the value of your investments, there's very few investments that will do that. One, if we're going to have very high inflation, which there's no doubt in the world that we're going to have, and it's going to happen fairly quickly with this recession coming, you need to own physical gold and silver. Physical gold and silver that you hold yourself, that you own yourself, that is buried in your backyard or put into a safety deposit box or whatever, is what we're recommending. We are working on a very large deal with a very large mine, and we are going to be able to bring you within the very, very near future physical gold and physical silver at spot prices. We want to make sure that on this next run in gold and silver that our clients make a fortune. And that's exactly what we're going to bring to you. We're going to bring to you physical precious metals, gold and silver, at spot prices with no commissions, no fees, no selling fees, no nothing, no spreads between bid and ask. All we want is for the listeners of our show in these extremely difficult and dangerous times to be able to make some money and hedge themselves correctly without spending fortunes on commissions and things like that. So, for example, if silver's at $20 and you buy it through us physically, and it goes to $20.01, you're going to be in profits because we're not going to charge you any commissions and we're not going to charge you over spot. So, again, just bear with me on this deal because it takes a while to get it together. It's a very, very large deal, and we have some very, very large clients involved in it. But, again, we are going to bring to our clients the opportunity to buy physical gold and silver and deliver it directly to you at spot prices without commission. So just bear with us, and that will be coming within probably the next 30 days. The other market is diamonds. Diamonds are doing phenomenal, and in this type of an economy where people are so petrified about the governments, like Randy mentioned at the beginning, Russians, government taking your money out of the banks. There's a very negative article that came out last week on the Canadian banks. We all know that the banking situation is in turmoil, and there's going to be severe situations with that. So basically, you need to own the type of assets that the government and the banks don't know that you own, and that is diamonds. There's no doubt about it. Diamonds are one of the best investments you could ever make, especially now, because they're portable private wealth. Nobody knows that you own them. They can't be confiscated. They never lose their value, and over the longer term, they go up more than almost any other investment. So, again, that's what I'm recommending, and that's exactly what I'm doing myself. No stocks, no bonds, no retirement savings plans, nothing that has anything to do with paper. I want physical gold, physical silver, and physical diamonds, and that's where we're not only going to be able to keep our money during the most difficult times, but we're going to make a fortune over the next 5 to 10 years. And again, this is what my company is bringing to you, the opportunity to hedge in hard assets, alternative investments. There's a reason why these major media sources are after us to come on their shows. Fox News, Bloomberg, all these major stations are interested right now in alternative investments, hard assets, and fortunately, we're the company that they go to. So I've got that big interview coming up on Fox on Monday. We just did a big hour-long interview here in Aspen, and we have many more set up because the media and the financial people are concerned about the state of the U.S. economy and the state of the U.S. investments. That's why we're saying be conservative, own physical gold, physical silver, and physical diamonds. Not only will we get through these difficult times, we're going to make an awful lot of money.
The most secure and profitable investment, millions of years in the making, rare-colored diamonds. Diamonds, nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio. Receive a free copy of our weekly World Financial Report on Radio newsletter. Now, if you were getting a newsletter that is not the official World Financial Report on Radio newsletter associated with this show, obviously you're not getting our newsletter. If you're not getting it directly from Harold Siegel via email free of charge every week, you're not getting the World Financial Report on Radio newsletter. We encourage you to speak with Harold, 1-800-432-1022, or go to rarecoloreddiamonds.com and sign up for our free weekly newsletter, the proprietary World Financial Report on Radio newsletter, only associated with this show. All the articles we talked about, you will obviously have the same look at them as we will. So if you're getting a newsletter from another source, you're not getting our newsletter. We encourage you to switch over and get the World Financial Report on Radio newsletter from Harold Siegel. Some of the stories in our newsletter, some of the quotes. Rob McEwen, I'm a long-term believer in gold and see it ultimately getting to $5,000. Anything short of that, I wouldn't be hedging. Gold will reach that level within the next 4 years. Bill Fleckenstein says, if the stock market cracks as the Fed tries to taper to zero, which I expect, I think Janet Yellen will have to start QE4. And in the process, hopefully some questions come up about the Fed and its policies. We talked about Russia and them absconding with pension money from their citizens. Richard Russell had a warning. Today it finally happened. I received an advertisement from a firm featuring a scare I've been waiting for. There are two ways for governments to handle their outrageous debts. The first is reneging, as per Argentina, what they're doing right now, but this is unthinkable. The second way is via inflation. Inflate enough and your debts appear to shrink. But there's a third way, and it's confiscation of wealth. Don't think it's impossible, because governments will do what they have to remain in power. How about confiscation of all individual wealth above $200,000, for which the government will give you stubs that say IOU. This will be a switch on the 1933 confiscation of gold. This time it may be confiscation of cash. And Richard Russell, who's been writing the Dow Theory letters for 60 years, is 90 years old, is very concerned about confiscation of cash by governments. We're already seeing it in Russia. We saw it in Cyprus with the bail-in. And the reason there's concern in Canada and why banks here in Canada have had their ratings reduced by rating agencies such as Fitch is that bail-in provisions are in place for Canada. That means if one of our banks got in trouble, they would take money out of our accounts to save that bank. Also, Richard Russell, in the good old days from the 1800s into the 1930s, every country was on the gold standard. This meant that you could take your paper money into a bank, turn it into a teller, and receive gold coins. Each nation had its own gold coins, and it is notable that when the nation went off the gold standard and you could no longer collect gold for your paper money, in due time that paper money lost purchasing power until ultimately it became worthless. This also is occurring with the U.S. dollar, which, since it's went off the gold standard in 1933, has lost 95% of its purchasing power. Now is the time to look at hard assets. Speak with Harold Siegel about investing in gold and silver. Take a look at investing in hard assets like rare-colored diamonds. Connect with Harold at rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022. And Harold, we have about a minute left in our segment, but you hear some of the things that are happening around the world, Russia going in and taking pension money. And, of course, we sit back and think, oh, it'll never happen in Canada, never happen in North America. And the truth of the matter is we don't know. And that's why you need to have assets that you can hold in your hand, that you have, obviously, in a personal, private, safe space, and you know where they are. And it will prevent, obviously, in a situation like what's going on in Russia, you from the government taking anything that has value that is yours.
You bet. That is so scary, Randy, and so frightening to think that the governments are that desperate that this is what they're doing now. I mean, you can't fight the government, but what it could lead to is martial law and that type of thing. I mean, look what's happening in just outside of in Ferguson,
Missouri.
You know, with the case where the police officer shot the black man. It's a scary time. Just absolutely frightening to think that this is happening, and it just keeps getting worse and worse and worse. It's a very, very concerning time. It's a time to be conservative. It's a time to keep to yourself and basically just doing the right thing and not taking any speculative trades in the market because it could wipe you out. These are not normal markets.
One thing Harold recommended years ago, and I think it's worth noting now, don't let people know what you have. Don't tell people, hey, I've got diamonds, I've got gold, I've got this, I've got that. Be very quiet. Don't say a word because obviously if something was to happen, you know where they would be going to first, and that potentially could be you. RareColoredDiamonds.com, 1-800-432-1022. Speak with Harold about investing in hard assets today. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 21st, 2014. Our time is 9:16 Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived. They're streaming on HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio, the World Financial Report on Radio, and you will find us. Subscribe to the podcast. We are portable. We go anywhere you do. The most secure and profitable investment, millions of years in the making, rare-colored diamonds. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about not only investing in gold and silver, but starting your own diamond investment portfolio. Receive a free copy of our weekly World Financial Report on Radio newsletter. If you're getting any other newsletter, you're not getting the World Financial Report on Radio newsletter and seeing the stories that we are, Harold and I, on a weekly basis. Get our free weekly newsletter from Harold. Learn more about investing in hard assets. RareColoredDiamonds.com, RareColoredDiamonds.com. The telephone number 1-800-432-1022 to speak with Harold, 1-800-432-1022. Featured diamond of the week is a stunning .52 carat emerald cut, fancy, intense pink argyle. And this would be a beautiful diamond to start a diamond portfolio with. In our free weekly newsletter, we have stories about the Argyle Pink Diamond Tender, and they talk about red diamonds in the story. We also have another pink diamond that is going to be auctioned off very, very soon. We have a story on that. And Petra, they actually have a 122.52 carat blue diamond, and they're in the process of looking at having that sold. We also have an interview with Harold. The Jerry Bovino Show spent about an hour interviewing Harold a couple of weeks ago. We have that in our free weekly newsletter. If you'd like to read more about it and see Harold being interviewed, we can send that out to you. It was a great interview, but get the stories we have this week. Argyle, they're debuting a diamond-encrusted feather pendant, and Harold was saying that he would more than likely have the opportunity to get some of those. A flawless pink diamond to lead Sotheby's Hong Kong auction. We also have the $2 million red diamond. It's the hero of the Rio Argyle tender. And when you take a look at these diamonds, they are absolutely stunning. And Harold, when you think about it, they say in this article that there are only over 1 carat 30 known red diamonds in the world. They're the rarest of the rare when it comes to the reds.
Oh, you bet. And the ones that are being auctioned off at the tender are absolutely breathtaking. They are so beautiful. All you have to do is look at them to understand, what they are. People will often ask me, they've never seen a red, most with only 30 in the entire world who would have seen them. But the fact is, people may think that they look like rubies, but when you look at a red diamond, you will see something that is so rare and so beautiful that you know exactly that it's something special. The thing is with reds and with pinks, most of them come from the Argyle mine in Western Australia, in the East Kimberley region. The Argyle mine was the largest producing diamond mine in the world for many, many years. They produced 30 million carats of diamonds a year. But out of 30 million carats, only 2% of those turned out to be investment quality. Most of the diamonds that come out of the Argyle mine are white industrial diamonds that are used to cut other diamonds. Then you've got their pink diamonds. They actually produce 95% of the pink diamonds in the world, a very, very small number. From the Argyle tender this year, there's going to be about 55 diamonds up for sale from the entire mine. That's how rare these pink and red diamonds are. So the fact is that Argyle produces these amazing diamonds for many, many years, and now the mine is going to close. It's on its last legs. It's not producing anymore. It's no longer profitable. They figure they can keep the mine open for another 6 years, and that's about it. Well, meanwhile, the price of pink diamonds and red diamonds are skyrocketing. The closer we get to the mine closing down, the more and more these diamonds will go up, and the biggest moves are yet to come. So basically, when you look at an investment, rare colored diamonds, especially these pinks, are the best investment you can make right now, because we'll never ever have another opportunity to do this. We'll never have another opportunity to invest in a colored diamond where 95% of them are produced in one mine and that mine is going to close. It's an unbelievable opportunity. It's an opportunity that those that take advantage of it will make a tremendous amount of money. And those that know about it and don't take advantage of it are going to sit back and say, this is something that I should have done, because we anticipate that the price of these pink diamonds will increase 500 to 1,000%. In fact, there's some pink diamonds, these vivid argyles right now, that are going up by 50% a year, some of them. 50% a year. There's no other investment that I know of that gives those type of returns with the safety that you have in the rare color diamond market. So we're the largest dealer of Argyle pinks. Along with that, we also have the resale market. We own H. Siegel Fine Auctions, which resells our clients' diamonds. So we're a full-service diamond investment firm that delivers the diamonds directly to you. You own them outright. They're in your possession. But they go up tremendously in value. Just a few examples. In 2003, at the Argyle tender, I bought a 2-carat vivid purplish pink Argyle diamond for $350,000. 10 years ago, that diamond is worth $3.5 to $4 million today. And when this mine closes down, there will be no more diamonds like this. And the prices, when I put this diamond to auction, will probably sell in the range of $8 to $10 million. That's how much we anticipate these diamonds are going to go up. You can buy a small Argyle. Most Argyles are actually small diamonds. 95% of them are under a 1/4 carat. But they're the most concentrated form of wealth in the world. They never go down in price because there's so few of them. They go up by at least 15% a year depending on the color. We only deal in the highest colors, fancy pink, fancy intense pink, fancy deep pink, and the best of all, which is fancy vivid. And those are the ones that are doubling every couple of years now. So as we get closer to the mine closing down, if you're one of the very few that owns these amazing Argyle pink diamonds, you're going to make a lot of money on them. And we will love to resell them for you. And we only get 10% of the profit. So we deal on a basis with our clients that when our clients make money, we get a small percentage. If our clients don't make money, we don't take anything. So the fact is that diamonds are not a short-term investment. You don't buy a diamond and sell it in 3-4 years. You're just not going to make a lot of money. You hold on to them for 10, 15, 20 years. You've got an asset that is different than any other asset you've ever owned. They never decline in value. They only go up. And again, when the mine closes down, you're talking about a payday that you will see like you will never see in any other investment. So the Argyle pinks are just a phenomenon, and with the Argyle tender coming up, they're just a phenomenal investment, and we have those diamonds for you. They start at about $50,000, and they go up from there. The other diamonds that are amazing investments are yellow flawless diamonds. Yellow flawless diamonds in 1980 were $500 a carat. Today they're $20,000. In 10 years from now, they'll be about $75,000. That's how much these diamonds can go up in value because there's so few of them. There's very few flawless yellow diamonds available in the world today. A 1-carat diamond is a beautiful size. We can put it into a beautiful piece of jewelry or just put it into your safety deposit box, as many of our clients do. A lot of our clients, because they're so disenchanted with the returns on their retirement savings plans, they buy a diamond instead of stocks. $20,000 invested today, in 10 years from now, could be worth as much as $75,000. I highly doubt you'll see those type of returns on a mutual fund or a stock. The other thing about these yellow flawless diamonds is that they're great for giving to your kids and grandkids. As far as I've got 4 grandkids now, we had a new grandson on July the 4th, and all of my grandchildren have diamonds put away for their future. I could buy them stocks. I could put cash in their account. I could do whatever, but there's no better investment over the longer term than a diamond. My wife's girlfriend inherited a 4-carat pink diamond ring from her grandmother. Her grandmother paid $50,000 for it 50 years ago. That diamond ring is worth close to $4 million today. That's how much these diamonds will go up over time. Again, you don't buy them for the short term because you're not going to make a lot of money from them. They have other tremendous benefits. The fact is that you can take a diamond with you wherever you go. If you go to Europe or you go to the States or you go to China or whatever, you could wear your diamonds with you. But the fact is that it's the only asset that you can cross a border with as long as you have your receipt for it. You can go anywhere with it. You're literally wearing a home on your finger. My wife wears a 14-carat flawless yellow worth almost $800,000. Let's face it, that's a house. And we can go anywhere with that asset. As the banks are getting into trouble, as the governments are getting more and more crafty and they're doing things like talking about negative bank accounts and bail-ins and stealing money out of other people's accounts, that doesn't happen with diamonds. It never happens with diamonds because they're not traded on exchanges. Nobody knows that you own them. And at this particular time, that's one of the most important things that you could ever own is an asset that nobody knows that you have. And Randy's 100% right. The thing is if you make the right financial moves during these particular times and you do well, very few people are going to be happy for you. Most people will do the wrong thing. They don't have, what it takes really to make changes. They deal within their own comfort level. But sometimes you have to step outside of your comfort level, and you have to look at assets that have a different way of trading and a different value, and that's diamonds and that's gold, and that's why it's so important during these times to own those two assets. Gold and silver and diamonds are amongst the best assets you could own, especially during these times. That's where all of my money is, in those markets, and I have no problem sleeping at night. But if I was in stocks, Randy, I would not sleep a wink.
You brought up a very good point, Harold. I guess it was about a month ago. We had that story out of Spain, I believe it was, where they were taxing bank accounts, and they were going to be taking millions of dollars out of bank accounts. There was going to be a bank account tax. So, yes, you can see it's all around the world, bail-ins, retirement money being taken in Russia, bank account money being taken in Spain, obviously bail-in in Cyprus. That's why you want hard assets, something in your physical possession. This week's diamond is a featured diamond from rarecoloreddiamonds.com, is a .52 carat emerald cut fancy intense pink argyle. And it is an absolutely stunning, stunning diamond. And flawless pink diamonds are going to be leading Sotheby's Hong Kong auction. In fact, Sotheby's will auction a rare purple pink diamond. Harold has offered these for quite some time as investments, with a pre-sale estimate of between $12.8 million and $15.4 million. It's at the Magnificent Jewels and Jadeite Autumn Auction on October the 7th. It's an 8.41 carat internally flawless pear-shaped, fancy, vivid purple-pink diamond. It was cut in New York from a 19.54 carat rough diamond mined by De Beers. Its internally flawless clarity is extremely rare in pink diamonds, while its fancy, vivid color grading is the highest color grading given by the GIA. The diamond is going to be viewed in basically around the world: Singapore, Taipei, New York, London, Geneva, Hong Kong. The color is one of the most beautiful and concentrated shades of pink in the diamond world, and that is what they've seen. Together with its exceptional clarity, it's not a surprise that it would command the highest per carat pre-sale estimate for any pink diamond to date, according to Kwek Chin Yao, the chairman of Sotheby's International Jewelry Business in Asia. The current record price ever paid at auction for a diamond or a gemstone is the Graph Pink, a 24.76 carat fancy intense pink diamond purchased by Lawrence Graff at Sotheby's in Geneva in November 2010 for $46.2 million or $1.86 million per carat. According to the auction house, the current record per price per carat for a fancy vivid pink diamond is $2.15 million per carat, set by a 5-carat diamond that sold in Hong Kong in January 2009 for $10.8 million. But you can see, Harold, and we will have auction results, obviously, from that auction. You can see the pink diamond world is on fire when it comes to pricing, and we have in our vaults, we have Argyle pink diamonds to start a diamond portfolio today. And you start with a pink diamond, maybe you look at adding a blue, a green, a yellow. You have all the different colors, Harold, and you'll help somebody build a portfolio.
Oh, you bet. We do that on a daily basis. The thing is that a yellow diamond and an orange diamond happen because of a certain mineral that is present in the ground that turns a diamond a different color. Like boron will turn a diamond blue. Two identical diamonds can come out of a mine. One could be white, which the majority of diamonds are, but because there was boron in the ground, a diamond turned blue, and it could be 20 to 30 times more expensive than the diamond that came out at the exact time, just because the diamond turned blue. So the fact is that these diamonds are ridiculously rare. It takes 100,000 carats of white diamonds just to find one colored diamond. And just because a diamond is colored does not mean it's an investment quality diamond. What's important is the how strong the saturation of the color is and many other factors. So there's a lot of diamonds that, even though they're colored, are not investment quality. What we bring to our clients are investment quality diamonds that are phenomenal investments that over time will make our clients an awful lot of money, and that's what we specialize in.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Go to the featured diamond of the week. It's a .52 carat emerald cut fancy intense pink argyle. You'll see video of it online, and you'll see a picture in our free weekly newsletter. And don't forget, we've spoken about this for the past couple of weeks. The Argyle tender is going to be kicking off here very, very shortly. And they have a $2 million red diamond. It is the hero of the Rio annual tender. A suitable name because of the hero diamond is the Argyle Cardinal. It's the main piece of Rio Tinto's annual tender of rare-colored diamonds being held in Sydney, Australia between Tuesday and Friday of next week. The 1.21 carat radiant cut rock is expected to fetch $2 million. Is one of only 13 fancy red diamonds included in the annual display in the last 30 years. It was named after a small red Northern American bird. Obviously, we know the Cardinal, the baseball team. What makes the Argyle Cardinal even more special is the fact there are only 30 known red diamonds over 1 carat in the world today. These are all-in-one kind of gems that will take their place in history in great collectible diamonds, according to Pink Argyle Diamonds manager Josephine Johnson. And last year, a precious rock like this set a record at auction at Christie's in New York City at $1.6 million per carat. And I know, Harold, you actually have had different investors invest in red diamonds through you. And most people, they dream of that if they're obviously in the diamond industry, having someone invest in a red diamond through you. But you've done that multiple times in your career.
Well, we certainly have. In fact, I've probably sold more red diamonds to investors than anybody has, and we own 10 red diamonds over a carat. So we probably own a third of the red diamonds that are available over a carat that are available today and graded by GIA, which is the Gemological Institute of America, which is the only grading service that you want to use when it comes to investment quality diamonds. EGL does mostly jewelry, but GIA is a nonprofit organization that deals primarily in diamonds and grading of diamonds. So, again, with everything that's happening in the world, all the inherent risks, inflation, beef prices at record levels, all the geopolitical situations happening in the world, these are not your normal market situations. These are not normal times. So you got to be smart. You got to look at these situations, understand where the risk is, and eliminate as much risk as possible. The thing is that we all want to hold on to our money. You know, capital, keeping on to your capital is extremely important, but also the opportunity to make money, if you're smart enough to be in those right type of assets, is certainly available to us. And that's exactly what we're bringing to you. In the 35 years that I've been in the investment business, I've never felt better about the recommendations that I'm making at this particular point. Those stockbrokers that are telling everybody to get back into stocks and put all your money in stocks, that's a big disaster waiting to happen. We've seen it happen before. It's going to happen again, and I'm going to leave this with you. There's no way, unless a market is manipulated, that the stock market can continue to hit record numbers when the economy is as bad as it is. So, again, if that makes sense to you, you should be looking at alternative investments. That's what we're into. And again, if it wasn't important, Bloomberg and Fox would not have had us on their show several times to talk about this very, very important asset that we deal in.
John Embry from Sprout Asset Management agrees with Harold. He says right now the price action in the markets doesn't have anything to do with reality. We've seen strength in the stock market this week, and we've also seen renewed weakness in gold and silver. The stock market is extremely overvalued, and it's where it is because of monetary creation. They can't allow that excess monetary creation to be exposed so they suppress the price of gold and silver temporarily. That's the reality as we see it today. It's unsustainable, but for the time being, they are able to maintain the illusion. And John Embry was in Minnesota, and in fact Minneapolis over the weekend, and was struck by how few people were in the major stores downtown, such as Saks. But there was massive amounts of inventory, and the prices were astounding. He bought a leather bag with wheels on it so he could pull it. It was listed at $599. It was then marked down to $300, and then they gave him another 30% discount when he bought it. So there's more evidence of a struggling retail environment, and John says, my experience is indicative of the true state of the economy. We get so many falsified and bogus numbers about the alleged strength of the U.S. economy. It's just not the case, Harold.
100% right. It's 100% right, and it's really concerning to see what's happening with retail sales. Again, and retail sales is really determined by the middle class, what the middle class is able to do and to spend their money. And at this point here, they just don't have it. The middle class is getting hurt more than any class, and it's only the very top 1% that are doing well. Everybody else is struggling at this point. And again, if the middle class doesn't buy and spend money, then there's no way in the world that the economy can advance. It's just that simple.
The most secure and profitable investment, millions of years in the making, rare-colored diamonds. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio, or receive a free copy of our free weekly World Financial Report on Radio newsletter. If you're getting any other newsletter other than the World Financial Report on Radio newsletter, you're not seeing the articles we are on a weekly basis, and that's obviously the proprietary newsletter associated with our show. So get your name on the list. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. Go to Harold's website, rarecoloreddiamonds.com, and you will see some of the world's finest investment diamonds online. It's like going to a museum online and seeing some of the finest diamonds in the world today. And we have our featured diamond. It's a .52 carat emerald cut, fancy, intense pink argyle. Take a look at it at rarecoloreddiamonds.com. You can also see it in our free weekly newsletter. If you take a look at what happened this week, let's do a quick recap here. Harold is going to be on Fox Business News, Risk and Reward with Deirdre Bolton on Monday. We'll have video for that for you to take a look at. Also, you can watch the interview with Jerry Bonino and Harold Siegel on Eye on Aspen. Concerns this week with Ebola, and obviously that continues on. The average price of beef hit an all-time high. Russia taking pension money from its citizens. George Soros making a further bear call on the S&P 500 index. 25% of troops use food banks in the United States. 35% of Americans are on welfare. 36% of Americans have not saved a thing for retirement. And I think it was a few weeks ago, Harold, we had the story where it was around 30 to 35% Americans have collection agencies going after them. So with approximately a minute left, we do this show. It's not about optimism or pessimism. It's about realism. We're not negative. We're very positive people. We're positive on the calls that we're making in the markets, which is to be in hard assets. Have that insurance policy in your portfolio today, Harold.
You bet, Randy. I think you summed it up beautifully. The newsletter was great this week, a lot of strong information. Again, August is a slow month. However, it's developing into what I think is going to be a very tough time for stocks and a very good time for commodities. So, again, the last quarter of this year, the first quarter of next year, we could see some abrupt market changes. We just want to make sure that our listeners are on the right side of the track.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Don't forget, you can connect and speak personally and privately with Harold anytime. You can speak with him at 1-800-432-1022, 1-800-432-1022. His website is rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.